Good day, class. Our topic for today is bank reconciliation statement. Now, we are going to look at the objectives of bank reconciliation statement. At the end of this lesson, students should be able to 1. Define bank reconciliation statement. Then 2. Identify the causes or reasons for disagreement between Cashbook and bank statements. Thirdly, know the 3 basic methods of bank reconciliation statements. 4. Students should be able to know the format of bank reconciliation statement, starting with bank as per cash book. Now, what is bank reconciliation statement? Bank reconciliation statement is prepared by an account holder for the purpose of finding out the difference between the cash book and the bank statement. Now, let us quickly find out the difference between cash book. What will cause a difference between the cash book and the bank statement? What are those things that will cause difference between the cash book and the bank statement? So the following elements will cause differences between the cash book and the bank statement. They are: 1. Unpresented checks. Then 2, you have the dishonored checks. 3, you have the credit transfer. 4, you have the standing order. 5, you have the bank charges. And 6, you have the dividends. Now, let us quickly look at some of the methods used for bank reconciliation statements. The 3 basic methods used for bank reconciliation statements are: 1. Bank reconciliation statement starting with balance as per cash book. Bank reconciliation statement starting with balance as per cash book. Secondly, you have bank reconciliation statement starting with balance as per bank statement. Bank reconciliation statement starting with balance as per cash book. Then thirdly, you have bank reconciliation statement starting with balance as per adjusted cash book. Now, let's quickly look at the format for bank reconciliation statement when starting with balance as per cash book. When starting with balance as per cash book, we have it in this format: balance as per cash book. Then you have the unpresented checks. Unpresented checks are checks that have been issued to customers which are yet to be presented to the bank. They've been recorded in your cash book, but they are yet to be presented to the bank. So such checks are added. You also have your dividend. Dividend are payments or the profits a shareholder gets for investing in a business. Dividend is added. Whatever is dividend for that very period from any company that the firm has investment in, such figure is added. Then you also have credit transfer. Credit transfers are payments made by the firm's customer. Payments made by the firm's customer to the firm's accounts. Payments made by the firm's customer to the firm's account, which are not known to the customer at the point of doing the reconciliation. All such credit transfers are added. Then you have a balance as indicated by the star, the double star. Then you less your uncredited checks. Uncredited checks. At the point of doing your bank reconciliation statement, there must be some checks that have been presented to the bank, but they are not yet credited to the account. So such checks are deducted. Then you also have bank charges. Bank charges are charges that are usually thrown into the firm's account, which the firm is not yet aware of at the point of doing the reconciliation. So all such bank charges are deducted. That is why we have less bank charges. The less dishonored check. Dishonored checks are checks presented but not honored by the bank. So all such checks are deducted from the account. Then you have standing order. Standing order are a kind of request made by the bank, made by the customer to the bank to deduct certain amount or to make certain payments to certain customers at that particular time. So all such standing order, instructions are deducted. Then when you less this amount from what you have above, you have balance as per bank statements. Now, assignment. In your own words, explain the following terms as they relate to bank reconciliation statements. 1. Dishonored checks. What are dishonored checks? 2. Standing order. Then 3. Dividends. What are dividends? 4. Credit transfer. Then 5. Bank charges. You need to explain this in your own words. Have a very nice day. Thank you.
Yeah, sir.